I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, CEO of the MacBeth Group in Edmonton and author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. Welcome to the show, Hilliard.
Nice to be on the show.
Hilliard, there's been another warning that Canadian real estate, especially in Vancouver and Toronto, is overheated, overpriced, perhaps by 40%. What's your view on that?
Well, I think that the warnings that have been coming out lately, CMHC, OECD, are really not anything new in the sense that all of the data that I found in my research confirmed what they were saying. But it is a big change in the sense that these people in the past that are saying this today have changed their story a little bit. So they are recognizing the fragility of the house prices and the incomes that it's needed to support those prices. And if people don't have the income to buy the houses, then you've got to rely on unusual external factors like foreign investors coming in. And those are always highly variable. They can be here today and gone tomorrow quite easily. So I think the OECD, but the big surprising one was CMHC, saying that they recognize, I think it was 11 out of 15 markets where there could be problems and 3 markets where there are serious problems, the big one being Toronto. That's a significant milestone in that they were not saying that in the past. I checked back late last year. CMHC was not sending any kind of a warning. They were making mild noises about slight overvaluation and stuff, but nothing like what they came out with 2 weeks ago.
Well, something like 40% of real estate sales by new-timers are supported by the Bank of Mom and Dad. How's the Bank of Mom and Dad doing?
Well, exactly. And, the thing that the Bank of Mom and Dad is doing apparently, and there's no way to confirm this, I wish there was better data, but there's not, is borrowing against their home equity line of credit on real estate that they probably had paid off. They paid off their mortgages and they're looking at retirement, or they're in retirement. And it seems like a small sacrifice for them to put a small line of credit, say for $100,000, borrow at 3%, and give it to the kids who can use it as a down payment to borrow another $500,000 or $600,000. But it's leverage on top of leverage, and that's what's not recognized, is that it's a very dangerous cycle, because it's all the basis for all of these loans, both the kids and also for the Bank of Mom and Dad, is real estate, and it's double levering, which is very dangerous. In fact, I think, and again, I can't prove this, but I think the foreign investor is also possibly double levered in the sense that while people show up in Vancouver with money and they pay cash for the property in Vancouver, it could very well be borrowed against a property back in China, and that again, that would be so. The Vancouver real estate market is dependent on the real estate market in China.
I understand, though, the Chinese have a much longer term way of looking at things, 5-year plans, 10-year plans, 30-year plans, not just their government, but the way they look at real estate. Okay, today it's not so hot, but 10 years from now, 20 years from now, Vancouver real estate's still going to be hot.
Yeah, I think they're willing to wait for a long time, but they're also momentum players, and the momentum means as long as the price is rising. And so in China, the banks are very, first of all, the banks are owned by the government and controlled, therefore, by the Communist Party of China. So they're not going to call those loans, even though perhaps the real estate is generating no income. You saw the stories recently about the ghost cities. Somebody has a book out about the ghost cities. So, obviously those properties are entirely dependent on future prices. There's nothing in the way of current income to support that. So the patience can run out. Like, I guess people have been very patient because it's been a rising price environment. But if it goes to a falling price, which is inevitably happens when the bubble starts to burst, then they can run away really fast, and that's what will happen.
What will happen if they start selling off those expensive properties at a discount?
It's going to be really interesting because, for one thing, there won't be any buyers. It's like, who's the buyer, right? I mean, there's only been one buyer lately. I mean, go back 5 years, there was more than one buyer, but there's only really been the foreign investor category buyer today. Most of the local people are probably selling and moving to Kamloops. I even read something today said, well, we can always move to Saskatoon. I don't know if they've ever been to Saskatoon. That might be a challenge. But for sure they can move to Calgary. There's some really good bargains appearing in Calgary. And so the local people have that option. And if the foreign investor / buyer dries up, there's not going to be any buyers left. And that's the big problem. And then there's a bigger issue with demographics, which has not been recognized, and this is one of the things that was brought up by one of the economists of one of the big banks, that there's no problem in the housing market, he's saying, because the demographics support it, and that's there's a problem with that argument. There's a big flaw in that.
And what is the flaw?
The flaw is that the fastest growing groups in Canada, their population is growing, but the fastest growing groups in Canada are people over 50, and especially people over 60 and over 70. So those people are not buying real estate anymore. They already own real estate, or if they don't own real estate, they're not about to start buying when they're 70 years old. But they're more and more likely to be sellers. And there's all kinds of research that I found that backs that up. Starting at about the age of 60, 65, there's death, obviously. There's moving into seniors facilities, and there's moving in with children and other relatives. So on net, there are a few buyers, obviously, but most of the people that are in that age category are sellers. And the problem is there just aren't the younger people available to buy all of the real estate that the older baby boomers would like to sell. And that's going to create a huge problem. So yes, the population is growing, but it's not the right kind of people. It's the wrong kind of people.
Is that where maybe allowing a high immigration rate would be a good thing?
Absolutely. And the Syrians coming into Europe, the Germans apparently, and this is hard to believe, and I just find this a little bit amazing, are talking about 800,000 refugees or migrants. I don't know if they're refugees or migrants. I'm not quite sure what the definition is there.
One or the other, they're there.
They're there, and but Germany has a problem even worse than Canada. Canada's got a problem. There's too many. Soon there will be too many older people, not enough younger people. But Germany's already there. They're kind of like Canada will look in 5 or 10 years from now. And so it'll be a big boost to the economy there because they need workers, they need young people, they need all of that dynamism that comes with that. And I suspect that's why, even though there's a lot of opposition to taking in 800,000, they probably will be able to pull it off. But all of Germany, 80 million people, all of the landmass of Germany would fit inside of Alberta quite easily and still have lots of room left over. So when we talk about density and that sort of things, we have no idea in Canada what density really means.
Well, I was going to say, if you want to know about density in Canada, take a look at the Earth at Night shot from NASA, or now just about available on any map app. Take a look where all the light is at night. And you take a look at Canada, it's a big black space with a little dot on the west coast, a couple of big dots in Alberta, a couple of little dots on the prairies, and a big dot where Winnipeg is, then nothing. Then Toronto, the whole lower part of Ontario is pretty bright. But there's a lot of Canada out there with nobody in it.
Nobody's been to some of those places. It's amazing. We hug the 49th parallel. That's all we do. And it's absolutely right. So to do the equivalent of what, so Canada's roughly half the population, slightly less than half the population of Germany. So we would have to do 400,000 or 350,000 to be roughly equivalent. They're talking 1% in Germany. So 1% for Canada would be 350,000. So 25,000 should not be a problem at all.
Yes, and anybody who lives in North America, Aboriginals included. At one point, somebody immigrated here. Yeah,
it's true. And in the beginning, all there were fur traders and Aboriginals. And when the settlers came from Europe, apparently, I'm told, the fur traders were not very happy because they didn't like the competition. They thought they were going to go into competition with them for the furs. And the Aboriginals were very welcoming. It was a big mistake on the part of the Aboriginals. They should have said, no, we don't want you guys, but it's too late now, I guess.
They were always very friendly to newcomers.
There's stories of Scottish settlers that came from the Highlands in 1815. They all would have perished that first winter, except for the native people that brought them in and took them in and kept them warm and fed them, and they were totally unprepared. Even though Scotland is not the nicest climate in the world, they still weren't prepared for what they found.
Yeah, they didn't know what 40 or 60 below was.
No, I don't think they did. And they also expected that there was more of an agricultural society, and so there would be some stores of grain and that, but there just wasn't any of that. So the Aboriginals saved them, basically. And
well, that's what American Thanksgiving is all about, is the native population saved their butts. The Canadian Thanksgiving, which, by the way, started 60 years before the American one, truly was a celebration of a good harvest. That's why it's in October. Nobody's harvesting anything in November.
No, it could change, though, with global warming. Maybe
absolutely. Peace River
will be going into Christmas with the harvest, and that'll mean we'll have a bigger crop, or maybe not. I don't know whether it means a bigger crop, but there's lots of land where none of those, like you said, none of those lights where it's all dark at night. You could actually have farms up there in the future that right now you can't have. Well,
my dad farms in Peace River and has since 1967. But I said, with climate change, I guess you can start planting palm dates. And he says, the one thing it has done is he can now grow potatoes before he couldn't.
Yeah, potatoes. Nobody wanted potatoes. They had to almost force people to eat potatoes. I read this. Dogs won't even eat potatoes. The people looked at the dogs, wouldn't touch them. So there was a whole thing that the King of England sort of begged people to start eating potatoes, because the big advantage of potatoes is when the marauders, like the raid parties, came from the Vikings or the Huns or whatever, the crop could stay in the ground and they wouldn't steal it because it was too much work to dig it up. And besides, nobody likes potatoes. So,
I'll tell that to the Irish.
Yeah, well, they were forced to eat it. I think that was
and then the potato blight and the crisis that caused. Hilliard, you say Canadian banks could be forced to raise up to $1.19 trillion, and we'll talk about that right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, I saw a tweet from you this morning that said big banks could be forced to raise up to $1.19 trillion in new securities. What's that all about?
Well, there's new rules coming in. So the Basel III, which is the regulations that are set by the international banking regulators, which most of the countries have signed on to, started in January of 2015, and full transition is expected to be completed by January 18th. And there's some new rules. And we've been told in the past that the Canadian banks are the safest banks in the world, and we're prudently regulated and all this stuff. But apparently it's not quite that simple. There's some complications to it. And so we saw about 4 or 5 weeks ago that the National Bank, one of the smallest banks in Canada, raised $300 million. So the $1.1 trillion would actually be a large number in relation to that. But if all of the banks had to raise a similar amount, it could be a very large amount. So the new rules, there's one of the things that the magic in Canada that's allowed the banks to show very good ratios is that mortgages that are guaranteed by the CMHC as insurance are considered assets or risk similar to the Government of Canada. And because Government of Canada has a AAA credit rating, they're allowed to count them as zero risk weight. Now, the new rules that are coming in have an overlay on top of that, which will require the banks to hold some capital. Currently now they don't have to hold any capital against those mortgages, and those are one of the biggest assets that the Canadian banks have is the CMHC insured mortgages. So if that rule comes in, and there's a transition period, but by 2018, unless they can lobby to get an exemption from it, they will be required to raise a significant amount of capital. The amounts are sort of hard to calculate because it depends on a lot of things, but it's a huge amount of money. Now, there's two ways they could raise that money. They could, like National Bank did recently, issue shares, but they don't like to do that. Or they could retain more of their earnings, and the capital would build up fairly quickly. Because the banks, as you know, pay out really large dividends, so they could withhold some of that money. But of course, their shareholders would be really upset if they started withholding the dividends. The shareholders are basically addicted to the dividends from the banks.
Well, who isn't addicted to income?
It's about the bank dividend yields are in the 4 or 5% range. So it's what do you get at the bank now? You get 0, or if you're lucky on a 5-year GIC, you maybe get 1% or something like that. So with the bank dividends being as high as they are, people are attracted to that. But so I don't think the management of the banks could afford to say to the people, you know what, we need to raise our capital ratios because of these new rules that are coming in. So we're not going to pay a dividend for a couple of years. That would be a disaster. So I'm not quite sure how they're going to raise all that money. It's a very, very complex.
Well, they can be like the Royal Bank that likes to up fees willy-nilly whenever they feel like it and double or triple them in a year or two. Yeah,
I don't know. We're talking a very large amount of money. Like the Royal Bank of Canada's got $50 billion roughly. I'm just ballpark of equity, and that they would have to maybe double that, which would be a very, very large number. And now there used to be many ways for banks to raise capital and all kinds of loopholes, but that's the other thing that's happened with this new Basel III regulations is almost all of those loopholes have been closed, and so it makes it very tough. The only real genuine type of capital that the new rules recognize are the shares themselves. So they have to sell shares to investors, and the reason that works as capital is it's permanent. The people that buy those shares in the Royal Bank, currently trading at $75, they can't just come and ask for their money back. No matter what happens to the Royal Bank, that money goes to the bank and it stays in there as permanent capital. So the new regulations after what we saw in 08-09 with banks all over the world getting into trouble, and some of them completely disappearing, most of them having to be bailed out by their governments, the new rules are much, much tougher. And we've been told up till now that the banks in Canada wouldn't be affected much by it. But now that as the new rules are starting to roll out and we're starting to see the impact of it, it'll be interesting to see. But the big issue is that zero risk weight on those CMHC insured mortgages, because that's that's only exists in Canada. It doesn't exist anywhere else in the world.
Would that see mortgage rates go up to help cover that?
Well, the mortgages going up would hurt the customer, right? So that banks would have a problem, because that's been one of their best earnings engines of growth, has been the Canadian household and lending to the Canadian household. And even a small increase in the interest rate would get most households into some kind of trouble. And interestingly, you asked that, because in the last 2 weeks, the 5-year Government of Canada rate has gone from 0.60% to 1.05%. It's almost doubled just in the last 2 weeks, and nobody's noticed that so far. I imagine that might be the first time most people have heard that. But the 5-year Government of Canada rate is very important, because that's what mortgages are set off the 5-year. So the mortgages have to be quite a bit higher than the 5-year Government of Canada because of the way the whole banking thing works, the spreads and stuff. So it wouldn't take much, a very small increase in the 5-year Government of Canada rate beyond what we've seen so far, and then it'll start to affect people that are going to ask for mortgages.
And if you're renewing a mortgage in a place like Vancouver or Toronto, that could be hundreds of dollars more a month.
Yeah, and everybody, as I understand it, I don't know if this is correct, but everything you read and hear is that people, because of the high price of housing, have had to borrow right up to the max, right? So they don't have a lot of room for, if they're paying $3,000 a month on mortgages, they don't really have room to go to $3,500 a month or something like that, which is what would happen. Now, it might not happen right away. For the people that have taken out 5-year term mortgages, it doesn't come up until 5 years. But my understanding is a significant number of people were borrowing on line of credit because they couldn't really qualify for the full mortgage. And also some people are on variable rate mortgages. So if interest rates start to rise, then that'll cascade through the whole system much more quickly than it would be if everybody was on the 5-year term.
Wow. So not only do we have a bubble with overpriced real estate, but the money to buy that real estate could become more expensive. And if the U.S. raises interest rates, would Canada be forced to raise interest rates as well to remain competitive?
Well, so what happens is, and this is again a source of some confusion and misinformation. The Bank of Canada only controls the very short-term interest rates, like the overnight rate and the rates where the banks lend money to each other. But the 5-year Government of Canada rate, the Bank of Canada has no direct control over that. They have one option where they could adjust that, but generally in their normal operations, they don't really have any way of affecting that. So who's going to want to leave their money in Canada at 1% for a 5-year rate if the U.S. rate is 3%? And there's just no way. The U.S. dollar is stronger, the U.S. economy is stronger. The U.S. has already been through their crisis and they've had a crash of their real estate. So I would move my money over there in a heartbeat. And so our rate, in order to attract some money, assuming we need some money in Canada, would have to go up to match the U.S. rate. And maybe not fully match it, but so at the moment, actually, we're still quite a ways below the U.S. rate. Our 5-year rate is still below the U.S. rate. But just with market forces, it could rise up to where it's equal to the U.S. rate, which is about 1.75% or even higher. And then the whole equation with mortgage money and all that changes very quickly.
Good or bad for us?
It'll be bad for us. Our economy was driven. Some would argue that as a deliberate tactic, the government back in 2006 decided to go all in on the housing market and use housing as an engine of growth, and it worked. But the result of that was debt levels in the household sector went up exponentially, dramatically. The last 10 years, household debt is soared in Canada. So the people that owe all that money, any kind of an increase in the cost of that money is going to hurt them. And they'll become less likely to buy another house, less likely to buy a car, less likely to go to the shopping center and buy, go for an outing to the mall and all that, less likely to go to South. It could be a big impact. Already in Edmonton here, talking to acquaintances, a lot of people are deciding to stay home in Canada just because of the dollar. The big winner is going to be Vancouver and Victoria, apparently.
Yes, our tourism could always use a person or two more. And the rest of Canada has discovered what Vancouver and Victoria call winter, they'd call spring or fall. Yeah.
It'd be nirvana to us, green grass and flowers. We've never seen that. We don't see that for 7 months here.
Yeah, and I'm complaining right now. They have the weed whackers and lawnmowers and stuff out in front of my place right now. You don't have that problem in Edmonton, I bet.
Not anymore. No, the ground is pretty frozen right about now. It's actually been a delayed start to that frozen tundra look, but it now has arrived.
Yes, a month reprieve. And I know usually when you have a really mild fall on the prairies, winter usually comes in the form of a huge storm or blizzard that shuts you down for a week or two.
Any day now.
Yep. Hilliard, thank you very much for chatting with us.
Nice to talk to you again.
My guest has been Hilliard MacBeth, CEO of the MacBeth Group in Edmonton, and author of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. You can forward comments about the show to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.